In front of our very eyes, the whole banking system is teetering near an abyss. With the problems of the second largest Swiss bank, we might have the real problem with credibility that right now lays upon the Europe financial system, when all of those credence that has been given to Switzerland throughout the recent decades might have go through a hard times. So Credit Suisse is going through a huge liquidity problems, and that will be the one thing we'll discuss this over. We have also the ECB interest rate meeting right in behind the corner, so we'll go through this as well. So I'm very glad you decided to pop in, and without any further ado, let's kick off our transmission. As a reminder, we are live, so if you have any questions, just post it into a chat that you can find right on YouTube, whether it's on a desktop or mobile version of an app. So at first, let's find out what's going on with this. One of the main topic that's right now is circulating around the financial world system. So the Credit Suisse on March of 16th announced it has arranged to borrow as much as 50 billion francs from the Swiss National Bank, and is making a tender offer to buy back up to 3 billion francs of dollar and euro denominated debt. So this is the consequence of long brewing troubles right now, where the bank where it has exploded into a possibly interior crisis, when those elements of a possibility of very low liquidity is right now shaking its structures. So when Credit Suisse has literally plunged on the market to the lowest levels on record after Swiss lender's top shareholder, Saudi National Bank, ruled out adding to its stake, the whole specter of investors and analysts has started to pose a question of whether Credit Suisse is somewhere at the verge of a very difficult situation for its survival. So right now, the one thing that also is going to pop out is that whether its demise of SVB Bank can spread to other banks, or is it just a fad? So is it just a fad? As whenever one bank collapses, the whole specter of entities are trying to prevent such failures, and also pointing that the cracks might be somewhere else, and that's why we are focusing on the possible problems upon the whole sector. So we are much more sensitive to that elements than we were before that collapse has happened. Otherwise there won't be much more to be scared about, but we need to be cautious in the environment like this. So right now the Credit Suisse is meeting with regulators and also the state of Switzerland in order to discuss the possible saving of problems. Right here you can find that the central bank and financial regulators said that Credit Suisse in the worst case scenario will receive a liquidity backstop if needed, seeking to restore confidence in the troubled lender. So it looks like the bailout might be not count out, and that's something we may be the witness of. So it looks that European Central Bank will have a large problems with hiking interest rates by 0.5 basis point, but about it in a second. Right now, we're gonna find that financial industry might be ready for credit support or backup funds for a financial instrument or transaction. So right now, with such such a statement of other banks, we may find it at the risk of the contagion, possible contagion, should be um, I would say extinguished. But for this to happen, you would need at best much more loose fiscal policy. But we are during the possibility of commencing of quantitative tightening in Europe that might be a nail into the coffin of such problems we are right now seeing. So about all of the things that may happen with Credit Suisse, will get you updated right now. The questions that also finding out been found out upon the press is Credit Suisse and other Lehman. So Lehman had a alongside SVB had much more conceptualized problems where we have found that this succumbed when funding had dried up and other banks stopped dealing with it. So the thing that differentiate CS from Lehman is this possible caution against more deposit withdrawals since the worst wave of outflows in October. So CS started to prepare for the worst case scenario, and that's why they had around 5 months. It looks like they supposed to be making their homework, but as we do know, as the biggest shareholder is not running over the assistance, the support, it means that something underneath might be of a weaker ground that we might even expect. So that's the thing that will return as a boomerang, as we don't know that that's the thing that also may have a contagion risk for the whole system. So what's about ECB? Right now, ECB is about to hike by 0.5 basis point, but that was a premise established back before these problems started to throw up. So right now, one of the head scratcher is when those all things may go, and that's why I do find that it will be much more unlikely that we'll have a 0.5 basis point right at this meeting, or otherwise we will have a much lower tendency of hiking interest rate toward next meeting that's may be weighing on the valuation of euro, so euro currency. So that's the thing we need to also ponder right now. So in my view, European Union is right here heading on a collision course with this very strict policy and the possible outcome of it might be much more shaky upon a year of 2023. All right. So what about the indexes? What all of this the Mr. Market is to say about? So right here you can find SPX, SPX at the open has slided, but at the close started to correct in that initial impulse, but we might be still on the way to this recently set local lows at 3800s. So that's where the possible or the possibility for bulls may turn up. Otherwise, we may consolidate upon this area, this congestion area, and right after, I do expect we may eventually run out of this congestion zone, as this volume profile of that box is strictly important for the whole structure. So that's where the majority of the liquidity in this medium term is sitting. That's why we should rebound out of here when those problems will fade away eventually. So that's in a short medium term, at least, as right now it's kind of difficult to catch the falling knife, but we do find that some of the demand is showing up right here. So I decided to switch my charts into a black and white when this white body is symbolizing a bull candle, whereas this black body is symbolizing a supply supply candle. So you may find it even more clear instead of using this green and red types of charts. So hopefully you find it more clear for yourself as well. So that's it in terms of what we got next. So that's it in terms of market outlook. Right now, let's head on to market movers, and we are heading to a economic calendar. And on Friday, sorry, not Friday, but as we just have a look at the whole 5 session days, we may see that yesterday was a balance of trade of Japan day that was higher than the forecast. So it means that the balance of trade right now is favoring Japan, and that's the thing that also favors more bullish tendency in the medium short terms. In terms of Thursday, we had building permits that has exceeded forecasts, so it's a positive for rebound of the economy right now, as it's a leading indicator that's right now pointing a possible rebound, and that may impact the whole structure of the market in the future. Deposit facility rate from EA alongside ECB interest rate decision at quarter past 8 a.m. and right after on Friday we have Michigan consumer sentiment to being delivered. So that's out of the economic calendar. Let's find out what about earnings calendar. So Adobe has maybe I will just find it. What's the projection for Adobe? So on Q1, it has delivered as estimated data. So it means that EPS is right here in a hiring tendency. So we are staving off this risk of a recession in terms of at least this merely company that right now is rebounding after this 2022 correction. So it's positive for Nasdaq as well. However, it aligned expectations, so it shouldn't have met with a euphoric tendency out of the market. So that's out of Adobe. Sorry, I haven't choose the right one. On Thursday, we have FedEx Corporation and Dollar General Corporation and Key Holdings yet to come up with its data. However, on Friday we have Polystar, Legend Biotech, and among the biggest centralized Electricis Brasileiras. So it's a Latin American company listed on American market. So among the sections at the end, we have also a trade idea, and as we do know, recently we've been trading Nasdaq as there where is the most and the greater liquidity and volatility is sitting. So let's find out what's the next projection for US 100. So right here you can find that let's find out. So as I mentioned, it's a white and black candles that I have just applied. So hopefully you will find it as it's still very clear for you. So right now US 100 is trying to found a support at 12.22. However, for this to happen, we need a much more stronger bull reaction than it's right now. Right now we are sitting merely at the highs of Tuesday of this 14th of March, but I do expect that after collapsing of this recent congestion zone and breaking lower, we'll try to find out another liquidity zone and check out that's the one that is sitting around 12.11 and 12.18. So if we just set up such liquidity zone, I would just try to find it out around this level. So if you ask me where is the best point to enter a position on US 100, right here it's around 12.14 and 12.16, but it doesn't mean we won't get to those levels. However, we may still have a large enough stop loss to prevent us from going lower. So right here, if I would like to set up my enter position, sorry, it's not that. It would be, no, it's So we are right here with a stop loss at 12.035 and with a possible extension and objective of a move right here to the previous highs of 12.45. So we have reverted this tendency of going lower and started to build new highs and new lows. That's why after a slide, I would expect another rally upwards to happen on Nasdaq, and that's what I do expect may happen. Is this rally towards levels of 12.45. So if we won't get to this zone limited by 12.13 and 16, I wouldn't find this a proposition of a trade as being valid. That's why I would search for another option. So I would be cautious and cautious of that it may even slide downwards further, but with setting a stop loss right below this week, I would feel rather safe. I would feel rather safe than sorry. So that's the option for me. You may take an advantage of it. This risk reward profile at 2.75 is still decent. The most favorite of mine is at around 3.0 and 4.0, but for the time being, 2.75 it's still the one worth taking a risk in my view. You may also post your opinions in the comments, so I will just get back to them after this video been published. So that's it in today's video. Thank you very much for watching, and as always, I'm inviting you tomorrow, 8:45 a.m.